special address.
Good evening. I'm turning a little more spiritual than I had been in the past after the budget discussions. There are people who look at the same set of figures and say that this looks like a cycle. Other people who look at the same set of figures and say this looks like a spiral. There's a third set of people who say, but that's a downward spiral. So I'm beginning now to be fully convinced that in the concept of Maya, illusion, it's all in the state of your mind. It's nothing to do with the figures. If you're on the side of the government, you would talk about what is positive in the economy. If you're not so friendly with the government, you talk about what is negative in the economy. So it's in your state of mind. Very correctly, the government spokesmen have been talking about the fact that we have a very robust economy. Look at our foreign exchange reserves, $450 billion, which is true. Our public debt is less than 60%, which is true. There are trade deficit is less than 2%, current account deficit, which is 2%, very, very true, very sustainable. Inflation until very recently was very moderate, absolutely correct. So you could say that therefore we are in great shape. And equally you can hear Arvind Subramaniam who says that, look at the numbers, we are in a great slowdown. You have the capital goods growing at negative 1%, negative 6%. You've got capital goods growing at negative 6%, consumer goods growing at negative 1%, which is a 17-year low. You've got exports growing at less than 1%. You've got imports at less than 6%, negative 6%, which is a 30-year low. So it is a great, great slowdown. This is a downward spiral. You can choose to believe that all of those numbers are right. I think it's true that we have a set of contradictions in terms of how we are doing as an economy. There are some sparks in the economy which are obviously giving us confidence. I broadly describe that as the balance sheet of the country, which is looking reasonably good. But the other set of numbers, which broadly might be said are the income and expenditure of the profit and loss account, which is not looking all that good. It's a declining situation. Therefore, take your pick, depending on which side of the fence you are. But it raises another very important question as to what are we judging this against? You know, there's a very interesting story that I came across, a story which is based on Mahabharata. Not straight from the Mahabharata text, but as a fiction. And this is, the fiction is about the Vanar Sena assembling at the tip of India, and each one discussing who's going to be the person to jump across the seas to go and retrieve Sita. So one monkey says that I can jump 20 meters. Another monkey says, I can do 30 meters. And the third one says that I can do it in hops, a few kilometers. Until they all say, Hanuman, how much can you do? So Hanuman climbs up this hill and then says, well, it's pretty far. But why are you all discussing distances? So long as the task is to retrieve Sita, you got to jump. Somebody has to jump. So it's somewhat like that to say that we can argue about the potential of growth. There are people who say that our potential of growth is no more than about 6.5%. We should forget about this 9-10%. We can only grow about 6.5% because given the fact that our savings rate is now less than 30%, our capital output ratio is at the best times about 4.5 times, which is pretty good. You cannot get arithmetically any growth in excess of 6.5%. So judged against the 6.5%, you're not doing badly. The other people who say, like Ruchi Sharma, who says that actually speaking, no country can now hope to get anything like 8, 9, 10%. That's because the number of additions that we are making to the labor force is coming down. The actual population addition into labor force is coming down from about 2.5% in India for about a decade ago, now to 1.4%. So therefore, you can only get with the given number of people in the labor force who have to not only work for themselves, but have to support many other aging population who are not contributing to the economy, who are not productive, and therefore it cannot be more than 6.5%, 7%. But like the Hanuman, we have to say that, do we want to be talking about what is limiting our potential for growth, or do we say we've got a task? And what is the task? The task is the fact that we still are talking about, after all these years, still talking about at least 200 million people below the poverty line, no matter how you define the poverty line. There are different definitions, but no matter how you do it, between 180 to 200 million people are below poverty line. And the fact that we might have an average per capita GDP of $2,000, which looks reasonable, but at least 65% of the population have less than $1,000, less than 50% of the average. That's the inequality that we have in the income and wealth distribution. In fact, one of the reports says that 1% of India's population actually controls 73% of India's wealth. So that's the inequality. And if we have to be correcting this inequality, and we have to be finding jobs for 1 million people, million job seekers joining the job market every month, then it's important that you have to grow at a high figure. So it's not about the potential and the limitations, but how can you push this to a larger number? I remember in 2006, there was this campaign that we were running in Davos. It was called the India Everywhere campaign. India was everywhere, at least in Davos. I mean, when you got down at the Zurich airport, there was this bus which had this, all the airport buses, coaches had the India Everywhere, and there was India Everywhere in every part of Davos. India may not have been everywhere in the world, but clearly in that meeting, India was everywhere. And there was this panel where one of the senior ministers and I were to be a part of that panel. And then just before we got onto the stage, he said, when should I say that India will overtake China? He said, can we say 2020? I did some back of the envelope calculation. I said, I don't think you should say 2020, maybe 2030 might be better. He said, no, I'll say 2025. We should have our aspirations to be higher. In 2006, we were, I think, just about less than $1 trillion. That's about $0.9 trillion. We are about 2.8, 2.9, close to $3 trillion, 3 times. And China was about, at that point of time, about $2.9 trillion, and they're now $14.7 trillion. That's 5 times. So in these intervening periods, we have grown 3 times, China has grown 5 times. So the gap has widened. Now, the possibility of overtaking China is now receding even further now, right? Is this something which we are comfortable with because we say that it's not going to be possible for us to grow any more than this? We should be happy with it? Or we should say, no, we need to still get the energy to make that extra jump across the sea. Do we have to marshal enough strength, marshal enough energy to be able to get across the street because we want the coveted price to be achieved? That's the question. So that brings me to my third point, which is, what does the budget do about getting this energy into this economy, getting this extra spring on the feet to be able to power this rocket? If you're in an orbit, and if you have to move beyond this orbit to a much higher orbit, then you need the propulsion from a rocket. You need to have an escape velocity which takes you up further up in the higher orbit. Does this budget have that kind of potential to energize you to get into another orbit? So, having talked about mythology and spirituality, let me give you a little story based on a Sufi tale. Now, this is about an old man who was searching something under a street light. So there was a passerby, good Samaritan, and this passerby said, old man, what are you searching for? And the old man said that, I dropped my needle and I'm looking for that needle. So he said, can I come and help you? So the old man said, well, actually I dropped the needle somewhere else, but this is the only place where I have light. Now, I think to some extent, looking at the budget to see whether that's giving the boosters for the economic revival is like looking for the needle where the light is, because there's so much of light and sound on the budget. We think that is what is going to be giving us the solution. But I want to give you the perspective of what budget can do and what budget cannot do. The total GDP, as all of you know, is about $3 trillion. Let's round it off to $3 trillion, and that's about roughly about 210 lakh crores. The size of the budget, if you take away the interest payment, the size of expenditure budget is about 23 lakh crore rupees. That is for 2021. 2021, by our projection, we should be somewhere at 240 lakh crores. And we will be, the budget is about 23 lakh crores. So that's less than 10%. 1920, the expenditure, the total gross expenditure, capital revenue, all of that together was about 20.7 lakh crores. 20.7 lakh crores. And in 2021, it will be 23 lakh crores. That is an improvement of 2.3 lakh crores. At 2.3 lakh crores is the incremental expenditure that you're putting out to shake and energize an economy which is 240 lakh crores. I just want you to get the perspective of this. That's less than 1% to be able to shake and energize. That's not going to happen. So this is not the place where you should be looking for the needle. So within this constraint of this, within the confines of what is possible in terms of our tax collection, our tax collection is in the region of about 10 to 11% of GDP. Unlike the developed countries like the OECD countries and so on, where the tax collection ratio is somewhere in between the 30-35% range. So you can talk about budget in the US, budget in European countries, trying to do something to shake up the economy or done something to impact the economy. The ability of Indian budget inherently is low from its numbers. From the numbers and expenditure is much lower to be able to impact the economy. That's something that I think it's very important to come to terms with. We don't seem to understand this, and therefore all the noise and sound that we have, that we hear in the television programs and all of that, missing the point that this has got a limited impact per se in terms of expenditure. I'll come to what it means by way of budget impact on the economy. So, it cannot move the needle beyond the point. But within that, has this budget done enough? I will say yes. Because if you take the overall numbers, I mean, you have the expenditure that you can argue whether something in Mandriga should get a little more money, or something else should get a little less money. The education should get more money, something else should get less money. We can say whether the amount given to by way of income tax relief is adequate, or you give 2 rupees and take back 1 rupee. We can argue all of that. Mind you that the impact that income tax changes creates is upon what the Prime Minister said yesterday is on this 1.5 crore people out of the 130 crore people. So the 1.5 crore people we can discuss until cows come home whether it's impacting rightly or wrongly, but this is a limited impact that it has. But the budget has a very significant impact on the state of economy and the direction that it will take to be able to energize the economy in a very different way. And that is in terms of the direction that the expenditure is put to, and the kind of proposals and kind of plans that it reveals. That is the criticality of the budget. It is not the numbers. It is not the revenue or the expenditure numbers. It is about what the economic plan of the government as revealed by the government. That is what is critical in terms of understanding and answering this question, whether there is enough in the budget to be able to energize this economy to move to a different kind of an orbit. So let me come to the classical definitions of what economic stimulus could be. There are four pillars of this, which all economic students would know readily. You can either push public consumption, which is public expenditure, investments and revenue. You can do private consumption, you can do private investment, or you can do exports. These are the four kind of big rockets that can push the economy to higher orbit. So let's take one by one very, very quickly, spending a couple of minutes on each. First is this issue relating to public expenditure, public investment. As I just now finished saying, that the public expenditure as put out by the government budget itself is not the issue, but what it says in terms of its qualitative direction and the catalytic effect that the budget will have in terms of catalyzing the private investments, or in terms of having a multiplier effect, or being a force multiplier in terms of the economic impact. In fact, it is possible today, and I don't know why it doesn't happen, I must pose this question to Dr. Narayan. It is possible to deploy econometric models to precisely say, oh well, not precisely, but most, or almost precisely to say, what will be the multiplier effect in terms of private investment, what will be the job creation coefficient of each type of expenditure that you have, and therefore can even measure the impact of the budget in those terms. I mean, rather than the industry people waking up in the morning on a budget day and even before having read the budget, the rating is 12 by 10, it is much easier, much more appropriate to identify what the impact of these various programs that the budget has in terms of its job impact or the multiplier impact, and then say, this budget has got a rating of 10 or 9 or 7 or whatever. So, if you just look at the numbers alone, that's not giving a picture, as I said, but we've got to look for what is likely to be the major kind of, I'm just picking up one major issue, which is not in the budget incidentally, which is outside the budget, which talked about a major multiplier, having a major multiplier effect, a force multiplier, and that is the investment that has been talked about in infrastructure, the 102 lakh crores that was announced. We all know that in the infrastructure investment has the multiplier effect. We all know that it has the effect of also creating jobs. So 102 lakh crores is a fairly sizable kind of investment. That's approximately coming to about 8% of gross capital formation of as compared to GDP, which is a good number. And that in 5 years means that roughly 20 lakh crores is what must be spent. If you look at the budget, it's about 4.8 lakh crores. That's what has been budgeted. Out of the 20 lakh crores that has to be spent as a part of this 102 lakh crores. The states normally contribute about 40% of the total, 60% coming from the center, but I will take liberally, another 50% comes from the state, that will be another 4.8, that will be something like about 9.6 and 10 lakh crores is what I can account for. What I don't know is what is this gap of 10 lakh crores? Where is this going to come from? That 10 lakh crores hopefully will come from PPP. But if it is a PPP, it's a public-private partnership, we must remind ourselves that that is broken today. There is no public-private partnership which is now functioning in a viable manner. There are no investors who are ready to step in that kind of a large number to be able to come to a PPP model. So I don't quite know. But assuming that there is some methodology by which we can get, then we got to look at where is this funding going to come from. As I said, it's the funding from the budget is only about 9 lakh crores. Where is the balance 10 lakh crores coming from? It cannot come from banks, because I'll come to that later, because the banks don't want to lend to infrastructure. They will, if you mention infrastructure project to the bank, you can be sure that the bank managers will simply go to bolt through the door and run away. So therefore, you're not going to get from the banks. There are no development financial institutions. The sovereign funds, which have been talked about in whispers, not in the budget, but in whispers, to the extent that I know, and I've been dealing with some sovereign funds in the last few years fairly closely, they don't want to look at the pension funds, for example. They don't want to look at greenfield projects. They look at brownfield projects. The sovereign funds, some of them are available, like the way that we tied up the Prime Minister tied up the Japanese funding for the bullet train, but it always comes with the tag that it's only the manufactured products from that country will be supported by the sovereign funding. There are very few sovereign funds which don't have that kind of a tag to have the manufactured products from that country. Some of the Arabic nations have that, but that requires the political kind of positioning to be able to attract that. Whether that is sitting well with the current political ideology, I don't know. But I'm therefore merely looking at the issue relating to the funding, and I'm saying there is a gap, and I'm not quite sure how the gap is going to be met. There's a gap in relation to where these projects are going to be spent and how these projects are going to be funded. Perhaps there will be an announcement soon as to what these projects will be, where the projects will be implemented. Perhaps there will be energizing of the PPP model. There's been some outstanding reports by Vijay Kelkar and others, outstanding reports in terms of suggestions. If they get implemented, maybe PPP model will get revived. Perhaps there will be a statement in terms of where the sovereign funds are going to come. Perhaps all of this will happen. Perhaps we'll have a light shining on the dark corner relating to the infrastructure funding for picking up the lost needle. The second part is relating to the private consumption. That's the second pillar. The private consumption issue is, if you stop and think, there is enough demand, there is enough supply. Nobody has got a shortage of supply on anything, right? We all have, all our demands are being met by goods and services. But the consumption goes up only if you start looking at what you would otherwise consume 3 years later, but I bring forward now, and because I can borrow and I can repay. It is the installment credit that stimulates private consumption. I want to buy a house because I have the confidence that in 20 years I'll repay. I want to buy a car because in 5 years I can repay. I want to buy a television set or something through Amazon because I can use an EMI for 12 months. It is the borrowing that enables the consumption to be picked up in order to give a booster to the economy. And who is the critical player in this? It is not the consumer, it is the banker who is the critical player. For the private consumption to go up, you need to have a very robust banking system which is able to push market credit. And where is the banking system today? We've got a banking credit growth today, this year, of something close to about 7 to 7.5%. Out of this, the public sector banks' growth is about 4.9%. The private sector growth, which is about 15-16%, the average is somewhere 7 to 7.5%. 70% of the credit comes from public sector banks. Only 30% comes from the private sector banks. In the economic survey, there is one beautiful chapter. By the way, this economic survey is an excellent document which is to be studied. And this document lays out completely the issues relating to the private sector banks and the public sector banks. It makes out the case that the public sector banks are actually losing 23 paise for every rupee in 2019. Every rupee that was invested by the taxpayer in the public sector bank, whereas the private sector bank have been earning some 30-odd paise. The public sector bank's market capitalization is of the average about 0.7 times or 0.7.5 times the book. The private sector bank's market capitalization is somewhere in the region of 3.5 to 4 times the book. So you have this very peculiar situation when Bajaj Finance market capitalization, the value of Bajaj Finance is more than State Bank of India, right? The value of bank, a new kid on the block, Bandhan Bank is more than Bank of Baroda. And the credit growth this year, I think for the first time in the history, I've got to check this out. I think this is the first time the credit growth is lower than the economic growth. Stop and think. What does this mean? This means that people are not borrowing, but they are repaying, right? Now, that's not a good thing. They are either not borrowing because they don't have the faith in the future, or they are not borrowing because the banks are not lending. They might want to borrow, but the banks are not lending. And that is the truth. It is not about the money supply. RBI has done everything from a monetary policy point of view. I don't want to take time. Monetary point of view, the RBI has done enough to push credit, but it will not get into the market because the intermediation by the bank is such that they do not want to take risks. In fact, one of my friends was saying that, you know what, the public sector bank chief puts all his cash in the safe, makes a double lock, and takes the key out and puts this into another lock, another safe, and closes his eyes and puts the combination so that he can't remember how the combination should work, and for safety's sake, puts both the safe in Arabian Sea. But this is truly the situation today, that the banks do not want to lend. It is not merely by the fact that the NPA is at 12-13%. It is not merely because that money is not available. It is because there is a risk aversion. Now, is there something in the budget that talks about it? There is one line which says that the capital requirement of the banks have been addressed. There is no new capitalization that has been proposed in the budget. Now, the argument is that there is enough capital adequacy, is about 13.5%, which is good, and therefore the bank should lend, but they don't. And that is traced not to anything other than the fact that there is an issue related to the culture of the banks, their ability to make a right assessment and then move forward. There was the BBB, which was set up some years ago. I think it was 2007 or 2008. It was set up, 2014 it was set up, I think, which is supposed to infuse new governance standards in public sector banks. It was supposed to bring new talent, but we haven't even heard about this anymore. So without those kind of scaffoldings and without this getting the banking sector to go out, I don't quite know how the public consumption is going to provide a trigger. Perhaps there will be a new setup, like a Temasek, which is a holding company for all the public sector banks. Perhaps this new setup, new institution is going to infuse contemporary talent, competitive talent, contemporary technology. It's going to infuse new governance standards. Perhaps the public sector banks will begin to start lending. It will take some years, but perhaps all of this will happen. Perhaps light will shine on the dark corner where the needle has been lost. Let me come to the last instrument for growth, and that is exports. The issue relating to export is that now, for the first time, we have a negative, it is lowest in the last 17 years, negative export growth. Now, we could say that, but this is all because the market situation is bad, the global economy is down. But we have to remind ourselves that our neighbors, Sri Lanka, Bangladesh, not to talk about Cambodia, Vietnam, all of them have been having double-digit growth the last 7 years. If somebody is telling us that Bangladesh is a poor country, forget it. In 2 years, Bangladesh will overtake India in per capita GDP. Bangladesh textile exports is already is much higher than Indian textile exports. It overtook India about 7 years ago. It has been since then been progressing very rapidly. So we cannot blame this external environment. There is once again an economic survey. I'm not talking about this. This is the government's document, economic survey, which dedicates a chapter in terms of what does it take to get India to again move up on the export chain. It makes two recommendations. One is the fact that one recommendation very strongly, one recommendation somewhat weakly, which says that the conventional textile basket, the conventional gem and jewelry, all of that have got plenty of leather and all of that have got plenty of headroom and we must exploit that. It doesn't say how. But it really makes a very good case that we've got to be a part of this, what are called the network products, which are the telecommunication equipments, which is about computer hardware, it's about automobiles, which is a part of a supply chain. We have an extremely weak position in supply chain. I think we are less than 5-6% in terms of the composition that we have, whereas China has about 30-34%. So we are not a part of this global supply chain. And the global supply chain is not about the Indian exporters exporting. It is about global MNCs coming and setting up shop here. Now, what does it take to get the global MNCs to come? It is the economic survey which says, and I'm not saying this, that you know what? It takes 41 days for textiles to move from Delhi to Maine in US, and out of that 19 days are spent in India for documentation, logistics and all of that. Now, it is again the survey which says that it takes 68 days for property registration. In fact, it makes a point that the number of approvals you require for property registration is more than the number of approvals you require for holding a gun. The number of days for property registration, 68 in Mumbai, where it is 7 in the case of China. So we have issues of this nature, and therefore, while we say that we have moved up, and we have moved up, undoubtedly, we must give credit to the fact that there's been this focused effort to get ourselves moving up the ladder in terms of the ease of doing business. But the fact is that we are not yet an attractive destination unless we create special economic zones. We had the special economic zones, which was misused. But we threw the baby with the bathwater. We have not created something in its place. And therefore, we haven't moved enough to be making ourselves an attractive destination for getting the exporters to, or the OEMs to come to India to set up shops so that we become part of the value chain. Let me stop here. As I said, these are the 4 important boosters to the economy from an economic textbook point of view. But I haven't found anything in the budget. Perhaps this will happen. Perhaps we will say that we will need to go for an international open door policy. By the way, we walked away from RCEP and giving a signal that we don't want to have free trade agreement. By the way, the economic survey says free trade agreements have actually benefited India, although the common belief is that free trade agreement with Southeast Asian countries did not benefit India. The economic survey argues exactly the opposite. And we have gone and raised import duties somewhat reminiscent of the 70s in terms of protectionist. But perhaps this will change. Perhaps we will create a CZ. Perhaps we will create the kind of environment and the energy to go into and plug ourselves into the value chain. I hope it happens. So let me end with one little story. And we live in hopes. We believe in mythology. I believe in mythology and believe therefore in miracles. There was this king who said that, you know, I dreamt last night of a flying horse. I want this flying horse in my country. So he called the minister number 1 and he said, can you produce this flying horse? And the minister 1 said, but how can a horse fly? Then he said, behead him. The minister 2 came and he said, can you produce this? And the minister 2 said, no, we haven't heard about a flying horse, behead him. And it came to the 6th or 7th and the 8th guy came and said, yes, Your Majesty, I can produce the flying horse, but give me 60 days' time. And so the king said, fine. I mean, this is the kind of positive spirit I require. Yeah, this is what will take us forward. And so this minister, the 8th minister, went home and he told his wife that I've got this 60 days' time to produce a flying horse. And the wife said, are you mad? How can you get a horse to fly in 60 days' time? Well, he said, if anything might happen, the king may die, I may die, or the horse might fly.